Well, they must have been celebrating a weaker dollar today. The U.S. dollar strikes again, taking a big bite out of earnings from both Nike and Tiffany's. Who's the next victim? We bring in our panel. We have Tangent Capital Managing Director and Fox Business Contributor Bob Rice, Price Futures Group Senior Market Analyst and Fox Business Contributor Phil Flynn, and Digital Risk Managing Partner Jeff Taylor. Jeff, I will start with you. Look, if it wasn't Nike and it wasn't Tiffany, it was Procter & Gamble. It's been Apple. Even Apple said it was affected by the dollar. Who do our investor viewers look for next to say, oh, sorry, our numbers are bad because of a strong dollar?
You know, this one might sound a little bit counterintuitive, but we all know that the housing market's had a tough time bringing millennials back to the first-time home buyers. So home builders have actually gone out and launched aggressive programs trying to attract the foreign nationals to buy those houses in the U.S. So I wouldn't be surprised, again, with a stronger dollar, if all of a sudden those foreign nationals have a little bit of pause about actually coming in to buy those houses. So that home builder sector might actually take a little bit of a hit.
You know, I hadn't heard that angle, and we do have Canadians and the Mexicans coming up to buy. We have, of course, the Russians and the Chinese newly minted millionaires. Bob, what do you think? Who's next?
Yeah, I agree with that observation, actually, by the way, that it's going to slow down the flow of foreign flight capital right now. But we also, I think, for viewers at home, one way to look at this is to say, look, this is going to hit all the multinationals, all the big caps. So maybe this is that catalyst that the market's been looking for small caps to begin to catch up. That might be one way to play this.
The small caps have actually done well. They have less exposure to a strong dollar. Phil, 8 months of a strong dollar, 2 days of a weaker dollar. So we don't want to ignore what happened today, but you've got to believe that there's going to be a long tail of a dollar effect. Who gets hit next?
Well, I think it's McDonald's. I think it's the fast food companies that are overseas. They're already struggling right now, and they're being hit not only by the dollar exchange rate with all the different countries, you know, you're also getting hit by higher cattle prices for their beef. So I think that's going to be a big one. Of course, you know, the U.S., Boeing's, your big airlines, of course, you know, they have a lot of these big deals overseas, and it's going to make it a lot more expensive. But I really think it is interesting what he said about the housing market. That's good. Yeah. All these guys that came over to this country and bought houses, all of a sudden their payments just went up, and they went up a lot.
Oh, let's hope they don't start defaulting. We don't need to see that again. We want to flip over to single country ETFs, exchange traded funds. They're popping up like spring flowers, with more than 30 debuting last year alone. Dozens more in registration with the SEC. Are these ETFs, whether it's, you can focus on South Korea, or you could focus on Greece, or even the UAE, are they a good investment, Phil?
I think they can be, you know, if you pick the right country, just like any ETF can be a good investment if you pick the right one.
Who's the right country?
And I think it's kind of interesting. Well, I mean, I saw the UAE one. They've been doing phenomenal right now. They have a lot of growth right now. They have a lot of projects that I really like. So I think that's going to be a very, very good one. The Greece one, of course, you're buying with blood on the streets if they come out with one on Greece. But who knows? You know, Greece was the best performing bond market earlier in the year. You know, if they pull out, this latest crisis, they might be a good buy again.
Bob, is there a single country you'd love to buy a basket of stocks in?
Well, you know what? You like to buy things when they're cheap. I think Nigeria is actually kind of an interesting play here. But on the idea of single country ETFs, the most important thing for people at home to remember is currency risk, what we just got through talking about. You could easily be right about a country, but lose money, because when you have to translate those earnings back into strong dollars, guess what happens to you?
Jeff, is there a favorite country you're looking at? We haven't heard anybody really mention Europe in totality, or maybe just a German ETF.
You know, right now, I think one of the countries that's not the favorite, but one that I looked at was Brazil. I think the key to ETFs, and the reason we all are so in vogue with them right now, is the transparency they give us. But when you're looking at a single country ETF, and I look like EWZ from Brazil, you have one bank and Petrobras to make up about 18% of that ETF. So am I buying a country, or am I buying a heavy concentration, and particularly maybe two companies? And I think that's where we have to continuously dig down into the ETFs and just monitor what they're holding to give us a better sense if that's a good buy for our particular risk appetite or not.
Well, yeah. I mean, you got to look at the country, but then play into what are the currency hedges. There are all kinds of risks, so many cross currents. Thank you, gentlemen. Coming up, we're not done with you. HBO. Don't you hate when you see that thing that shows your viewership is buffering when you're trying to watch stuff? Well, HBO, Showtime, and Sony are jumping into online TV, and they don't want to see that either. They are asking broadband providers for a separate lane for their services to steer clear of growing internet congestion. We are back with our Phil, I mean, I thought the whole discussion of net neutrality was you can't pay extra, at least if you're a company, to make sure that your stuff isn't slowed down. But for the actual consumer, they can pay extra, which means aren't we all wanting it faster? We're all going to have broadband prices that are higher.
Right. I mean, it's crazy. And you say, hey, they said with that internet, they invented another internet and 3 internets, and exactly correct. The big money at the end of the day is going to control this thing. And, you know, it's interesting. Right now, these companies that you just mentioned, they are king. Forget king dollar. Content is king, and they realize that right now. Cable companies are in big trouble right now. You know, they need to do something because this competition is getting real. And when Apple comes out with Apple TV, you better watch out. It's going to be a whole new world.
But for people who are binging on, say, Game of Thrones, okay, and then you want your Game of Thrones and you want it now and you want 15 different episodes at the same time, Bob, why shouldn't I have the option to pay more? But you've got the networks themselves agitating for this.
Yeah, I think it's inevitable, absolutely inevitable that this is going to happen. There will be a free public internet, and it'll be slower, and there'll be a more expensive private set of lanes. There's no question about it. It's a great way for HBO to make more money because that can be part of your subscription. It's a great way for the cable providers to recapture some of the economics that they're losing as people cut the cord. I just think there's no way that the FTC is eventually going to be able to stop this divergence.
Yeah,
it's going to happen.
Yeah, the FCC is not going to be able to. There's a gray area right now, and that's where it is. Okay, let's move on to knowing how many calories are in your shot of Johnny Walker or your pint of Guinness. You're about to find out whether you want to know or not. Diageo is putting calorie labels on its products. Jeff, I think a more informed consumer is a better one, right? But you start to realize you're drinking your calories. I'd rather eat mine.
I got to tell you something. I think this is a brilliant move by Diageo, getting out sort of that first mover advantage. In businesses, they're basically coming out now and saying, here's everything that's in your vodka, that's in your beer. It's absolutely going to force the hand of competition like Bacardi and Brown-Forman to follow suit. And the more that we know about what's in our products, the more that information we have, the better informed decisions we're going to make and more comfortable.
I'll tell you, Kettle One has 96 calories in 1.5 ounces. Johnny Walker, about the same. Guinness, oh boy, David, 124 calories in a 12-ounce.
I just had one last night.
David had one last night. Bob, what do you think? A good move, bad move?
I think it's a brilliant marketing move. Look, would you rather have 5 vodka and tonics or 1 McDonald's milkshake? And there's no saturated fats, no cholesterol. They're going to start eating market share from McDonald's here.
Phil, you're in Chicago. You eat your calories. I want the milkshake.
Yeah. Hey, you know, we've got cold winters here. We need that, you know. I mean, then we can melt it off in the winter. But I think the funniest thing about this is people trying to read the bottles after they had it. How many calories have I had? Let me see. It's only 90, 80.
Yeah, exactly. And just remember, Long Island iced tea, 7 ounces, 780 calories. So stop mixing. Just have the straight stuff. Thanks to Bob Rice, Phil Flynn, and Jeff Taylor.